Hello guys, and welcome back to another video at the Capital Traders Group. Now in this video I'll be basically going through manipulation and stop hunts. I want to go through how stop hunts take place, why they take place, and more importantly how we can look to take advantage of them in order to capitalize and profit off the market. So without further ado, let's get straight into it. Now on this first example, what you'll see is a double bottom. Now, a double bottom is basically where retail traders will see a price make a significant reaction from a demand zone, where a push up, right? That's your reaction, and then push down again to retest that zone at a significant demand zone. And then with the expectancy that price will continue higher and not come low, and this is the support floor. So ideally, what they'd look to do is buy once you see a reaction from the retest zone, stop loss just below the lows to the target, wherever that is. And that's exactly how a double bottom in theory works, right? Now what I refer to this as is equal lows, mainly because this is what we refer to as liquidity. Now the market needs liquidity to run, right? The market in essence is heavily manipulated, so it will engineer liquidity into the market in order for it to make its desired move. So what you'll actually see in this scenario is price will do something like this, right? Price will come back down, clear this liquidity here, and then make its actual real desired move. It collects all those stop losses, all that money gets collected, and then mitigates this more prominent demand zone before continue on higher with its actual with the actual previous trend. Now this is very, very crucial to understand, because you need to understand the market needs to collect liquidity from one place in order to give it to the other, right? It needs to take in order to expand. So it's a very simple concept to understand, but I'll give you guys another example for on double top. Now on double top is again the same thing, where you'll see price come to a supply zone, make a significant reaction, and then when price retests that zone, you retail traders will look to sell, stops above the high, and then look to take look to target the lows, wherever that is. And then often what price would actually do is price will come back high, clear that liquidity point, and then make its actual real desired move, okay, here on the left. Now again, the market needs liquidity, so it will often make these moves in order to collect enough stop losses before the desired move needs to take place. So this is a very clear example of how these stop hunts actually take place. And this is what I mean by a stop hunt, where liquidity is where stop losses are taken, right? Very clearly, they're collected, and then ideally price mitigates a more prominent supply zone before dropping down lower. Now this example is very, very simple, but the psychology behind it is much more important. Rather than looking at things as double tops or double bottoms, you need to look at price as equal highs or equal lows. You need to start to look to identify price zones or where liquidity will likely be. So then you can wait for price to then come to a zone, collect that liquidity, right? Collect those equal lows in this example, and then look to enter using your plan, whatever that may that may be. Now this alone will significantly increase your win rate and your RR on top of that. So this is a very clean example to understand, and a very simple concept to grasp. Now things do get a little more complex, but which I'm gonna go into now. I'm gonna go through a bit more of a realistic or complex scenario. Now in this scenario, now again, when I mentioned that the market is heavily manipulated, that is true. I mean, if you've seen any of my other videos, you'll realize that too. But if you guys do want a specific video just on liquidity, do let me know in the comments below. But in this scenario, what you're seeing is these clear I believe it's referred to as triple tops, right? These clear liquidity points, okay? Where now, what the psychology behind this setup would most likely be retail traders wait for a significant zone, see a reaction, a strong reaction, price comes up, retest that zone, see a bearish reaction, look to enter, right? Stops above the high, and then look to enter on the low. And then what we see again, price comes back, we see a third reaction. Oh wait, it's a triple top. So then they'd look to enter here, right? Again, reaction from the zone. Target the lows. And then let's say trader, so that's trader A, trader B, and let's say trader C is more of a structure trader. So what they do is they'd wait for a break of structure, wait for confirmation, and then they would look to enter on the base of on the break of structure, put stops above the high, and then look to target the lows, right, wherever that may be. And then what in essence the market does, right? So as I mentioned, the market is hunting for liquidity. So what it will do is it's advertising liquidity. Okay, this is an advertisement of liquidity. So what it's doing is it's consolidating, it's creating small traps for retail traders to get involved before collecting all their stop losses, okay, before hitting all these stop losses and then coming to a more prominent supply zone, okay, and then making its real desired move. Okay, so you need to understand, before you see scenarios like this play out, you're much more likely to see a zone of consolidation. Okay, again, this is what I refer to as advertisement. The market is advertising to retail traders to get involved in the consolidation, right, while there's liquidity still remaining and that has not been cleared, all right, giving you maybe breaker structures, more impulsive bearish reaction from the zone. But again, it's only advertising for you to get involved. It's inducing liquidity into the market so it can hunt those stop losses and then make that bigger push in its more desired region. Okay, again, the market has to take from somewhere in order to give in the other. Okay, so that's the most simple way I can explain it. Okay, so I hope that doesn't confuse you guys too much. If you guys are, please comment, leave a comment down below, and I will try to reply to that too. So now we've understood that, right? We've understood that you'll much more likely see a zone of consolidation and advertisement for retail traders to get involved or induced into the market. So what do? You wait for that liquidity to clear, those stop hunts to be hit first, and then you wait for your zone to come, and then that's where you look to enter. Now, you wouldn't ideally just blindly enter here, depending on your plan, of course. What you do is you wait for lower time frame confirmation. You scope down on the 4 hour, 15 minute, 15 minute, 5 minute, 1 minute, whatever time frames you look at, and then you wait for your low time frame confirmations, right? You wait for structure break or order flow, whatever your desired low time frame confirmations are. Then you'd wait for that, and then you'd ideally enter. This alone would increase your win rate and your RR significantly if you can identify this correctly and enter at the right zones. You can do very well just trading these type of setups. Okay, so that's that example done. Now let's go on to a live PA example with something a little more complex. Okay, because this is a simple version. So let's go on to Euro USD. Now in this example, what do we see on Euro USD? Right, we're on the 6 hour. What do we see here? Now we're in a clear downtrend, right? I could do something like this. Right, we're in some sort of downtrend. Right, prices in this sort of downtrend, right? Just to give you guys a little example. Okay, price is in a clear downtrend. Why? Because we see a lower low, right? Structure break, lower low, lower high, lower low, lower high, lower low, lower high, and then a lower low. Okay, so let's zoom in a bit. Now from this zone, what do we see? We see a clear structure break, right? We see price has strong volume from this zone that caused this structure break to come back down to this low. Okay, so let's say this is the low. Let's just mark it out green, right? That's the low, and that's a zone we could target later. Now I'm gonna zoom in a little bit. Now quickly pause the video. Can you quickly identify where the liquidity is? It's very simple. I've zoomed it in. Should be easy, right? Liquidity is here. Right, so that's a clear liquidity zone. Now what do we see here? Now usually what I see a lot of new traders try to trade these these setups, what they'll do is they'll scope down a lower time frame and they'll find a valid zone here, right? Now again, the zone may be valid, okay? Now I'm just using this as an example. The zone may actually be valid, but is it a significant supply zone? No. Why? Because it did not cause this structure break here on the left, okay? It takes a lot of money to cause these significant structure points or zones to break on the higher time frames. What did create that structure? Where did that move derive from? That bearish move that caused that structure break here on the left, right? That zone is here on the top left, okay? Now the reason this is a more valid zone on also is because again there is this is another concept, is there is a lot of inefficiency in price here, okay, which is something I can cover in another video if you guys would want me to, but let me try highlight this. There is clear inefficiency in price here on the left, okay? So we have inefficiency in price here on the left, so it means that price is much more likely to come back to the zone before it makes its actual real desired move. Again, we have liquidity here as also, so let's go down on the lower time frames. Now we have liquidity here. So what a trader would actually or a newer trader would do is they'd wait, they'd see breaker structure, okay, but they understand that there's a clean liquidity here, and this is a prominent zone. So what you could do is you could take what you could do is take the trade from here, right? But again, you have to understand the probabilities. It's very unlikely that price is going to come down to this zone from this zone, because this is not the main push zone. This is not enough of a significant supply region. It's just above the high, okay? And again, you have to remember the market is it's in a consolidation, right? It's ranging. It's looking for traders. It's advertising or looking to induce liquidity into the market. It's sort of ranging to try to get traders involved. It's just offered a breaker structure, so a trader could enter onto the retest above a high, right, to try to target the lows. What would happen? Right, price would come up, come down again, cause another breaker structure. Right, it's still ranging. It's still advertising that advertising more orders into the market. And then what does it do? It comes right back up to the zone, right, and it looks to take it out. It's coming into our zone now. So let's zoom in now. So what do you see? It comes in, taps into our zone, and takes out this liquidity here. Takes out this liquidity point here now, right? It's taking it out after this clear consolidation. We've seen price come into our zone now. Another trader would look to take this trade, right? Not say it's not a valid trade. It's just not at a significant zone. So I would not take this trade. But they would take this trade and expect it to come down to the lows. So let's see what happens. Now we see a significant reaction from the zone, right? But let's see what price does. Again, it's still within that range. It's cleared it's cleared this liquidity point now, but it's still in this sort of range. After advertising more liquidity into the market. Again, it's still advertising more liquidity into the market, because these type of traders would then, traders who trade this setup would then wait for some sort of confirmation, a price to come back onto a discounted zone, and then look to short again, okay? And then what would price do? Right, look, it creates that breaker structure, comes right back up, right, again, ranging. There we go, right? It's arranged, create another trap for traders who trade this type of setup, and then make its real move to its real desired zone. As I said, this is part one. Part one is understanding the model and how to identify it. Part two is understanding how to identify the correct zones, which is very, very crucial. So now you've seen how that inducement took place. So now let's get rid of all this advertisement, all this stop hunts collected, right? Because basically what the market has done is collected all those stop losses from those traders that tried to short, and now it's come to the significant zone now, right? So now let's get rid of this. So now what we want to do is now it's come to the ideal zone. Now is the right zone to start to look for shorts. Ideally, you'd want to look for shorts in this zone, depending on how you trade or what your reactions are. But what ideally I'd do, I'll scope down, I'd wait for a reaction, which we have seen on lower time frame. We saw a reaction, and then I'd wait for a retest, right? Not an equal high, a retest. So a lower high of this zone, depending on my confirmation, which I teach to my students. I'm not going to divulge that here. But what you do is you'd wait for a retest or lower high in this zone, and then you wait for lower time frame confirmation on the M1 or the M5, depending on what time frame you like to trade. And then I'd put my stops within this region, stops above this high. It's already mitigated our main zone, and we've seen a significant enough reaction, and we've collected more than enough liquidity with the consolidation in place. If I mark that consolidation out, right, range, we've seen that range, advertisements, liquidity in cleared, and now I can look to take that trade. Let's go back on the 1 hour. Look to take that trade if my low time frame confirmation are met with the low in place. Okay, let's see how price plays. Right, it comes right back up to our main zone, creates a lower high, and then price pushes down. Right, creates a clear breaker structure. Ideally, you'd want to start maybe break even now, or start look to take some partials, and then wait for price to start pushing into its desired direction. Again, right, price has cleared the zone, right? Let's do 4 hour. Clear the zone, come into the prominent supply region that broke the structure point, and then create equal highs, consolidated, induced enough liquidity into the market, stopped everyone out, come to the main point, and then gave you low time frame confirmation for the real move to take place. Now, I hope that was a clear enough example for you guys. And make sure to rewatch the video if it does get a little complicated, but I tried to put it as more simple terms as I possibly could. So if you guys do like this video, please leave a like and subscribe, and comment on what next video I should do for you guys on the channel. Now, if you guys do like or want to learn how to trade, or want to know more about service, links will be in the description below. Also, in the below is a link to our free Telegram group where I post free daily charts, as well as tips on the market and some free trades. Also, I give out updates on spots that are open on our mentorship, as we do have very limited availability. So be sure to subscribe to the Telegram group. It's free, and you guys can also get a lot more value from it. So if you guys like the video, please like, subscribe, do all the good stuff, and I'll see you in the next one. Bye bye.